Yo, what are YouTube? It's Forex. Please be sure to follow me on IG. Now, in today's video, we are going to be going over structure. Now, whenever you hear the word market structure, that's basically telling you what type of trend the market is in. Either you have a uptrend, which is a bullish trend, or you have a downtrend, which is a bearish trend, or you have consolidation. That means you're moving sideways. For beginner traders, I don't recommend trading in consolidation. It's probably just a waste of time. It's possible to make money. I make a lot of money in consolidation, but I would rather you stick to uptrends or downtrends. Preferably, I like taking sells more than I take buys. Even though it's really just the opposite of taking buys, I just feel like sales are just a lot more easier to see. Okay, so in today's video, we are going to be going over market structure. And before we get into that, well, first things first, the navy blue candlestick is going to be our bearish candlesticks, and the light blue candlestick is going to be our bullish candlesticks. Okay, so yeah, this is just my favorite color. My favorite color is ombre blue. It's a combination of two different blues. I know I'm weird, whatever, but this is how the market moves. Okay, the market moves in highs and lows. Okay, all right, so this level right here, this is going to be a high, this is going to be a higher low, this is going to be a higher high, and this is going to be a higher low. Now there are indicators that can do this for you, but you don't need an indicator. This is literally the easiest thing in the world, bro. Like, just do this over and over. Literally just watch the video over and over. Now for the bears, okay, all right, so this is going to be our first low, this is going to be a lower high, this is going to be a lower low, and this is going to be a lower high. Okay, real simple, nothing to it. All right, now when it comes down to how we look at the market moves in waves just like that, but there are certain things called breaks of structure. Okay, so let's say for example, let's move this right here. Okay, all right, so let's say that the market got right here. Let's say that this is a form of support. The market bounced off support and it literally did this. So what did the market simply do? The market had a change in structure, which is a break of structure. Okay, so this is a lower high right here, right? This lower high got broken through, and what was made after that lower high was broken through? Well, this was a high. And then once that high was made, then we have a higher low. Okay, because this higher low is higher than this low. Okay, so this is simply a break of structure. Now when it comes down to a break of structure, this is a shift in trend, which means you should change your bias. Okay, once you start seeing shifts in structure, that's when you can change your bias to look for long. Now when it comes down to taking a sell, so right, let's do another example. And actually I'm going to go to the real chart right now so that we can be able to see some candlesticks, and let's just mark up our charts. Okay, this is a good way to mark up your chart. Like if you need help with your zones, you can simply do, okay, this is a high, okay, boom, this is a higher high, okay, boom, higher low, lower high, sorry, that's a low, and then you have another low, okay, boom, this is a break of structure right here. Okay, come down. Market is really if you find yourself literally going back and forth, you're in consolidation. You won't know you're in consolidation until you're already in consolidation. It's literally like quicksand, literally. Okay, but whenever you want to do your zones, what you can simply do is you can just make your candlesticks disappear, and you can simply go to wherever you see the most amount of taps are. That's where you can put your zones, and then just pick between where you find yourself to be at support and be at resistance, and that's how you can easily do zones. Really simple, straight to the point. If you need more help, you can even put the line chart on and just do your zones like that, because it's basically the same exact thing. So really simple, that's how to do zones. But yeah, when it comes down to a break of structure, so when it comes down to breaking structure, that's when you know that you want to shift your thinking. And let me just do the replay mode real quick. And okay, all right, so For example, let's say the market, right? We already see the market is kind of in a downtrend. We're in consolidation, but it looks like the market's trending down because this high right here wasn't broken and these lows are really getting tested. So let's say if the market happened to do something like this, it pushes down. Okay, now once the market pushes down, and the market moves in ups and downs or downs and ups, so basically once we get this market pushed down, and let's say we come back to this area right here, if the market happens to give us a rejecting candlestick, something that we're going to go over, actually we already went over that. If the market gives us a rejecting candlestick, that basically shows that the market tried to attempt to push up but then end up not going up, rejecting. So now we can look for ourselves, because we have basically this area. Let me put this right there. We have this area right here serving as support, which is structure. Once we break through that, this is where you get your break and retest. Okay, and what we do is we take this trade from zone to zone. Now, let's say the market didn't do that. Let's say the market ended up rejecting. And then we have candlesticks that are pushing up. Now, me personally, I wouldn't want to take a trade until we see something similar to this right here, because that's a change in structure. That is a break of structure, because this high right here is going to get broken, this high right here is going to get broken. And if we look back at previous data, we've seen that the market came down to this area multiple times and it rejected multiple different times. We have this candlestick right here, not really an engulfing, it's an ugly engulfing, but we're on an hour time frame. I'm sure it looks a lot better on different time frames, but I wouldn't want to take my buy until the market shows me that it's breaking structure to the upside. Okay, so let's say if something like this happens, where this high right here happens to be broken and then it taps back into this zone. If you see a good rejection, if you see some solid candles that you know and are familiar with, I would definitely say to take the trade. So let's see exactly what happened, because the market did end up pushing up. Okay, boom. So the market came back down. This is an example of an engulfing. The market came back down on a lower time frame. I'm not gonna lie, I'm sure it played around. Let's take a bet on it. I'm sure it gave some type of rejection. Okay, boom. So we have some type of rejection, of market coming back to this area and then starting to bounce up. So this could have been your ideal trade. Now, I'm sure that it probably did the same thing as well up here. It probably did something similar to that. So let's just skip forward. Let me go to a different time frame. I feel like that's going to take forever. All right, no, it's just shooting straight through. Okay, yeah. So it really just shot through. But at the end of the day, we know for a fact, you see how it's able to just shoot through once it breaks through that high? Not only did it break through that high, but it broke, not only did it break through, what was the high at? Not only did it break through this high right here, but it also broke through that high right there. That is a sign that the market wants to continue to go up. And that's how structure is. If you're able to understand that the market moves in highs and lows, and if you happen to get a break of structure, that break of structure is able to get retested and defended by the participants that you want, which in this case would be buyers, then you can be able to take your trade higher, and you don't have to worry about sitting in consolidation or having your trade really lose. Again, like the market, if you lose a trade, 9 times out of 10, the way I trade, I lose because of timing. My biases, they're normally correct because I'm waiting for the market to show its true intention. If I'm in a downtrend, I'm looking to take sales. But if that market shoots up and then shifts structure to a bullish trend, which is a buying trend, I'm looking to take buys. It's that simple. Our zones are the key levels where we're looking to take these trades from zone to zone, and that's why I'm never really wrong. I don't mean to say like I'm not the best trader in the world, but if I just stick to my rules, take my time, and only trade things that I understand, I don't lose. It's that simple. Okay, so that is going to be market structure, breaks your structure, consolidation, and trending markets in under 10 minutes. Hope you all enjoyed this video. Be sure to like, share, and of course subscribe. I will see you all in the next video.